All right, welcome to tonight's show. So I'm going to jump in and talk about strategy being added to the S&P 500 potentially. We will know on September 5th, and then inflows would begin on September 19th. Number two, the Fed gave a talk at Jackson Hole on Friday, and the talk that they gave means that the Fed is dovish now instead of hawkish, which means we're way more likely to have an interest rate cut. So that's the second thing. Third thing is, if you're wondering why the Bitcoin price dropped, a big whale sold a couple $1 billion worth of Bitcoin earlier today and just went all the way down to about $112,000. And then finally, I'm going to talk a little bit about Ethereum and BMNR because one of the largest banks in Singapore has decided to tokenize its notes. Notes are similar to bonds, and put those notes onto the Ethereum blockchain. So there's lots of things that are going on in the marketplace right now. Let's dive in. Not tax advice, not financial advice, not legal advice. Do your own research. And then the other thing that I'm going to do is I'm going to spend some time today talking about the Fed, because we see how the Fed comes in and makes these big announcements and it influences the market in a very, very big way. But I'm going to back it up and talk about the origin of the Fed, how the Fed was created, and what the Fed actually is, so that we all understand this. And we can understand what's going on in the economy and how this is influencing and affecting everybody. So number one, let's just talk about strategy. We know that strategy has been sitting around kind of lollygagging up, down, but mostly down over the last month. It's been very disappointing. We're seeing the stock, but also know that strategy moves in this way. It moves up, it moves down. It's super volatile, but it could be added to the S&P 500. And we will know on September 5th. What that potentially means is once the vote goes in, because they have to be voted on, they've met all the qualifications to be added to the S&P 500. They check all the boxes, and then it needs to be voted on. And so once it's voted on, we will find out on September 5th if they are approved. And then if they're approved, inflows will start as soon as September 19th. And so the passive inflows that could go into strategy, we're talking about the potential of billions and billions of dollars just from the S&P 500, $10, $15 billion. And then as you see more inflows coming in from the S&P 500, that would attract more attention from other people. And the estimation is billions and billions of dollars from just other people investing into strategy as well. So this is a big moment coming up. I think whether they get added to the S&P 500 or not, if they do get added, there'd clearly be a lot of juice and a lot of inflow of passive money into strategy. But let's not forget, we're coming into the hottest months of October and November of the typical bull run that we've seen over every 4-year cycle. And so strategy, in my opinion, is going to run anyway. And we're going to see a very, 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 very strong run from strategy. So that's what I'm expecting to see in the later months of this year, more October and November. And then, of course, the Fed will announce mid-September if it's going to cut rates. Now, if you watch the address by Powell at the Jackson Hole event, you would see that he changed his policy stance. You have to read through all the verbiage and all the talk that he gives because it's very hard to understand what he's saying. But the basic thing is they're changing kind of their stance and their policy of how they're looking at things. And so the market took that as a rate cut is likely to come in September. Now, prior to that talk that he gave on Friday, the polls were saying maybe we have a 70-75% chance of a rate cut in September. Now the polls are back to saying we have about a 90% chance or more of a rate cut coming up in September. So that would be good news, because when rates get cut, money flows into the economy because it's cheaper to borrow money. It's cheaper for businesses to borrow money. Eventually, a rate cut would lead to mortgage interest rates potentially going lower, and it would be better for the American people. And I think we've all been wanting a rate cut for a long time. Many other countries have been doing rate cuts, and we are behind the curve. And so in September, this could come and would be exciting news. So that would be a big influence on the market. And of course, strategy being added to the S&P 500 would be a really, really big deal. So that would be exciting as well. So the Fed has turned from hawkish to dovish, and this is good news. The basis point cut would be about 25 basis points. Some people are saying 50, probably more like 25 basis points. If you're just joining us, a Bitcoin whale dumped some Bitcoin earlier today. So you saw the price hovering around 115, shot all the way down to 112 because a couple $1 billion of Bitcoin was unloaded. If you were watching on Friday, maybe you weren't watching, But if you were watching the speech that Powell gave, you saw that the market, Bitcoin went up from 112,000 all the way up to 117,000. We watched that sucker fly up. We watched Strategy go from a 337, 338 all the way up to 357. And so we just saw a surge in the market. And of course, with a surge like that, some people are taking profits, some people are selling off right now, and now we see a retreat going on in the market. Big news on Ethereum. Ethereum has broken its all-time high. Ethereum ran up to 4,900 and change. And we saw on Friday a big run up from Ethereum. And then today on Sunday, there was a big run up to over 4,900 today. So Ethereum is on the run. And so as you've heard me on some of the previous shows, as I've been sharing and talking about MSTR, I believe that the next MSTR is BMNR. It is the company that owns the most Ethereum on the planet. So just like you have Strategy that owns the most Bitcoin on the planet, BMNR's intention is to be the next Strategy, but to be BMNR, mirroring Strategy's playbook, buying Ethereum. And so now they hold about $6 billion of Ethereum in their treasury, and they have a plan to raise $20 billion more to buy more Ethereum. And so they are on a rocket ride right now. Tom Lee is the chairman of that company. There's big investors behind it. I expect to see big things happening from Ethereum and big things happening from BMNR as well over the next 4 to 5 months. Full disclaimer, I own BMNR. I also own Strategy, as you guys know, and I own Bitcoin. So that'll be interesting to watch. And the reason why, like, it's just, I'm very bullish on Strategy over the next 4 months still. I think we're going to have a rocket ride and have a hell of a run in the next 3 to 4 months. And as I said earlier on the show, we will see probably more second half of September, October, November, the run in Strategy. We might be very choppy for Bitcoin and Strategy between now and then, and we'll see what happens. But the reason why Ethereum's catching a lot of steam is just the media on this, and the things that are happening with Ethereum are big because Wall Street's behind it and the government's behind it. And the reason they're behind it is pretty simple. The stablecoin law that was just passed, where for every digital dollar that you have, it has to be backed by a US dollar or UST bill. So now the government is basically in bed with the stablecoin market. The banks are basically in bed with the stablecoin markets. And there's going to be a huge push behind this. And more than 50% of the stablecoins are on Ethereum. So it's no doubt that Ethereum is going to do big things in the next 3 to 4 months, not financial advice, but it's going to run, and it's already running. And we see more and more institutions moving to it, not because it's the fastest chain, but it's the most established, and it's been around since 2015. So I just got news last week that the largest bank in Singapore is deciding to tokenize its notes. So they have these notes that you typically have to invest $100,000 in these notes to get access to them through the Bank of Singapore, not the Bank of Singapore, the largest bank in Singapore called DBS. Now DBS has decided that instead of just issuing these notes at $100,000, they're going to put it on the Ethereum blockchain. They are already doing this. And now people are going to be able to buy fractional shares of these $100,000 notes. So you can buy $1,000 worth. So if you look at the mainstream adoption coming, where banks are waking up, there's also news that the central bank is potentially going to take their digital euro and put it on Ethereum or put it on Solana. So when you look at what's happening, where the banks and institutions are waking up to the fact that they cannot compete with the blockchain technology, and the fact that the blockchain and the crypto world runs 24/7, 365, the banks and the institutions have to move to the blockchain to literally compete and thrive. And they're not going to let somebody else get there before them. So you're going to start seeing more and more people moving faster. So this news that the largest bank in Singapore is literally tokenizing their notes. And all it means to tokenize something is you can take a stock, you can take a real estate, you can take a bond, you can take a note like they're doing, and you tokenize it. You wrap it up, you put it on the blockchain, and now people can buy it and trade it 24/7, 365 instead of 9-10 hours a day. That's where it's going. All right. And that's where the world's going. And Wall Street's waking up to it, and they want to go to the most reliable chain that's been trusted, and that's Ethereum. And so you see Wall Street moving on to Ethereum. You see other countries considering Ethereum. You see the bank of the DBS, the largest bank in Singapore, just went onto Ethereum. So there's big news happening in the marketplace. Now, none of this takes away from the fact that I'm still bullish on MSTR and still bullish on Bitcoin, but to not pay attention to Ethereum and to not pay attention to BMNR is just like, it's putting blinders on, okay? So pay attention just for educational purposes, and check it out. Vic's asking me, can you see BMNR getting to 200 plus? You know, here's the thing. Like, we have to take a look and see what the MNAV is for BMNR. Okay, you can actually figure it out mathematically and calculate it. I think the MNAV is going to go over 2 for BMNR. So do the math, right? And this is just my personal thing from studying and looking at it. But do the math on BMNR, right? So if it's at 54, 55 right now, what do you think Ethereum is going to go to? Now, some people who are conservative are calling Ethereum might go to $7,000 this year. If you listen to Tom Lee, he says he thinks 7,500 is low, and then Ethereum could go up as high as $15,000, which is extremely bullish. So if you get a double, here's my thing. If you get a double from Ethereum, if Ethereum goes from where it's at now and you get a double, which would be 10,000, then you have the potential for BMNR to what? To do a triple, which would be 150, or a triple would be 165. And is there the potential to break 200? There is. It would be a very bullish scenario for that to happen. I wouldn't bank on 200, but in my mind, I'm thinking of it because I bought in at about 60. I'm thinking in terms of the cost basis for BMNR. For me, it's $60, and it's down to 54.5. I'm betting that for me personally, that I think BMNR is going to hit 120 is my personal viewpoint, that it should hit 120. And I think there's a chance for it to break 150 is what I'm looking at. So we'll see. Okay. We'll see what happens. Not financial advice. Again, this stuff's very risky. And, by owning Strategy and owning a company that owns Bitcoin, Strategy is super volatile. Wait till you see what happens with BMNR. It's going to be even more volatile. The difference is and you got to just take your hat off to Saylor on this, because he paved the road for these Bitcoin treasury companies, and he paved the road for these Ethereum treasury companies, and he paved the road for any crypto treasury companies out there. So he really did pave the road. And so it would be natural to see that more people have faith in these types of companies. So the accumulation in terms of the speed at which BMNR is buying Ethereum is much, much faster than Strategy was able to buy Bitcoin. They're doing it at a rate of about 8 times faster at a minimum. So you're going to see an explosion in their acquisition of Ethereum. Let's see what happens and how much BMNR goes up or how much it goes down. But I think there's a good future for this company. And I really, really, really like Tom Lee. I love Michael Saylor, and I really, really, really like Tom Lee. So I think you just got 2 titans, and you just watch these things. And I think they're the most interesting plays right now for me personally, is to watch Strategy. And listen, Saylor and Strategy ain't dead, man. Okay, this is my personal thing. There's no way we're coming into one of the hottest freaking periods of the bull run in the late half of this year. And to think that Saylor does not have some tricks up his sleeve of some big things that are going to happen with Strategy coming up in September, October, November. This guy has got some stuff up his sleeve. So just sit back, watch, and just see what the master does, okay? He's going to come out gunslinging. So we're sleepy now. August is typically sleepy, and we know Ethereum's having a nice run, but it's sleepy right now for Bitcoin. It's sleepy right now for Strategy, and Strategy will be back, is my personal opinion, and I am holding my stock, and I'm waiting for that thing to go. And I bought a bunch of BMNR, man. A bunch, okay? So not financial advice. I like to take risks and play with highly volatile companies because I love the upside, all right? And I believe in the founders. I believe heavily in Saylor, and I believe heavily in Tom Lee, all right? If you don't know Tom Lee, check him out. Watch his stuff. I mean, he's been calling what's happening in Bitcoin. When Bitcoin was at $100, Tom Lee was calling Bitcoin in 2012, all right? This guy's been right about a lot of stuff. And he was calling, I think he's calling a $5,000 Ethereum by the end of August, he was saying. We hit 4,970 or something today. All right, so the guy's pretty spot on. And he also Tom said that when Jackson Hole happens on Friday, which just happened, he said that the Fed was going to turn dovish, and they just turned dovish. Now, I'm not saying he's right 100% of the time, but this guy's got Wall Street. He's got the ear of Wall Street. And he's got some big freaking investors invested in this company, BMNR. So watch Saylor, watch Tom Lee. Listen to what they're saying. Watch the people who are in charge, because you watch the people in charge. That's who I look at first. Do I trust the people in charge? The answer on that is yes. And I trust Saylor. I trust what Tom Lee's doing. And do I trust the strategy of what they're doing? And I do. So I think hats off to Saylor. Hell of a job. And wait for the next 3 months. Let's see what happens. I think it's going to be a fun ride. All right. So now we've got that. Some interesting things happening. I'm going to break it down and pull back a little bit here on something that I think is very interesting for people to know. Okay. And this is, how does the Federal Reserve work and what actually is the Federal Reserve? Okay. So I spent some time last night digging into this because I wanted to share this with all of you. And I have a new book coming out called The Money Game. And I've got 13 or 14 chapters written. And on this book in particular, in chapter 4 or something, I talk about the Fed. And so I'm just going to give you a breakdown of the Fed, because I don't think many people understand how the Fed actually operates and how the Fed actually came into existence. And since the Fed comes on TV and mentions one or two words and the market either goes up or down, they have heavy, heavy influence in the markets and heavy, heavy influence in the world. Who is the Fed? How was it created? And how does it operate with the US government? All right. So let's just dive in here a little bit, because I think this is going to be very fascinating, and I'll let you form your opinion. I'm just presenting the facts here. Okay. So the Fed was started in 1910. There was basically a secret train carried a handful of America's richest bankers to a place called Jekyll Island. All right. And they met in total private. Like, they even used code names. And so right around then in 1910, they wrote the blueprint for what became the Federal Reserve Act in 1913. All right. So who was at the actual meeting? This is interesting. If you're just joining us, I covered BMNR, I covered MSTR, Ethereum. So I talked all about that. Now we're diving into the Fed. All right. So who was at the meeting where the Fed got started? You had a guy by the name of Frank Vanderlip, who's one of Rockefeller's guys with National City Bank. You had a guy by the name of Henry Davison, who's JP Morgan's partner. And you had a guy by the name of Paul Warburg, who's linked to the Rothschilds. And then you had other of the biggest banks in America being represented. And you even had a German banker who's there. And I think his name was Aldrich. You'll have to look that up to fact check me on it. Okay. 3 years later, you had President Woodrow Wilson. He signed the Federal Reserve Plan into law. All right. And here's what Woodrow Wilson said after the fact. This was years later. He says, "I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated. The growth of the nation is therefore in the hands of a few men." So from that moment on, when Woodrow Wilson signed the act for the Federal Reserve to come into place, the U.S. money system became privately controlled from that moment forward. Now, you've heard all of this before, maybe or maybe not, but what you probably haven't heard is how it actually operates. So I have simplified it, broken it down, made it super simple, and I'll tell you how the Fed operates, because you might be wondering, when we print money, who actually prints the money? And when we print money, how does it actually affect the citizens? And like, how does it work between the Fed and the actual banks? And you'll be interested to find out what this is. So here's what most people don't know. So the Federal Reserve is not fully federal. You probably know that. It actually has 12 regional banks across the country. Okay, those banks are basically the money printers. Those are the ones who hit the keys and print the money. But here's the interesting thing, all right? So you have the 12 regional banks, the Federal Reserve banks, right? But those banks are actually owned by private member banks like JP Morgan, Goldman Sachs, and Citibank. All right, I'm going to say this one more time so you get this. This is a very important piece of data, okay? So the Federal Reserve has 12 regional banks across the country. Those banks are owned by private member banks like JP Morgan, Goldman Sachs, Citibank, and more. And so what happens is, by law, you have the private banks who own a piece of the Federal Reserve banks. And so by law, the member banks, which is the private banks, they receive a 6% dividend every year just for holding shares in the Federal Reserve banks. So in English, what does this mean? You got the Federal Reserve, right? This organization. It has this Federal Reserve banks. And then you have private member banks of the world, like the Citibanks and things, that own a piece of the Federal Reserve banks. And by owning a piece of the Federal Reserve banks, they get a 6% dividend by owning a piece of it. So the Federal Reserve Bank and the private banks are in bed together. Does this make sense to everyone? Okay. They're in bed together. If you're just joining us, I covered MSTR, I covered BMNR. You can watch it. I covered a little bit on Bitcoin as well. I'm getting into the Fed now because we had this big announcement of the Fed on Friday, and now I'm pulling back the curtain to show you how the Fed works so you understand, okay? So just get the scenario. Federal Reserve, 1913, comes into play. Federal Reserve banks, there's 12 of them across the country. The private banks, the banks that you know of, right? The JP Morgans, the Goldman Sachs, the private banks own a piece of the Federal Reserve Bank. So this whole situation where we have the US government, we have the Federal Reserve, which is not, it is a private institution because it has private member banks that own a piece of the Federal Reserve banks. Right? This is pretty wild. Right? Go check it out. All right. Now, in summary, basically, Wall Street banks own a piece of the money printer. So every time you see money being printed, it's not just the Federal Reserve, it's not just the Federal Reserve banks. The private member banks are involved in this whole game. Right? So this is, and I'm sharing this with you so we understand the importance of something like Bitcoin. So we understand the importance of these decentralized platforms like Bitcoin. This is very important to understand, okay? So now, you want to hear about the money loop, okay? So you might be thinking, like, you hear these things thrown around. Anybody hear these all the time? Put it in the chat box. You hear like treasury bonds and stuff. Oh, the treasury bonds, and this is what's going on with the U.S., and this is what's going on with the debt. But what are they really saying, my friends? Okay, what are they really saying? All right. When the government needs money, is this real to everyone? The government needs money, right? Because the government tends to spend more than it earns. There's a reason why we're $34 trillion in debt, yeah, in the U.S. So the government spends more than it earns. So the government spends money on wars, bailouts, programs, roads, you name it, right? So when the government needs money, and this is where it gets interesting. Like if you want to take a piece of paper and just write this down, this is interesting. When the government needs money, it gets a loan. So throw out all these words like treasury bonds and the things that can easily confuse the American public. The government needs money, they get a loan. Right? It said that they're going to issue these treasury bonds, they get a fucking loan. That's how it works. They need a loan, all right? That's the game, right? So they get a loan, right? And they borrow money. Now, who actually lends the money to the US government? It's the Fed's member banks hand over the cash, but only as a loan. So you would think that in this case that the US is always going directly to the Fed and the Fed banks. No, when the US wants to get a loan, this is how it happens some of the time. The US will get a loan from the private member banks. Interesting, right? The US will get a loan from the private member banks. All right, now it gets more interesting, right? So the Fed member banks, which are, again, we'll go back and say who the Fed member banks are. You got JP Morgan, you got Goldman Sachs, you got Citibank, right? So those banks will lend money to the US government because they're Fed member banks. And if the government borrows $100, this is just a scenario that I'm, making up here, okay, just for illustrative purposes. If the government borrows $100 from these member banks, then of course it's going to owe, let's say, $105 back, all right? Because there's interest. Now, these loans, they're dressed up and they're called treasury bonds, but let's call them what they are. They're loans. The government needs money. They get a loan. They go to the member banks. These member banks are private banks. They're not government. They're private banks, okay? And then this is what happens. This is what's really interesting, okay? If you're tracking me here, track this, okay? So the banks, these private banks that have loaned money to the US government, they don't want to wait years to get repaid. So the Fed swoops in and what they do, they print fresh money. So check this out. The Fed prints fresh money and they then buy the loans back from the banks. Is this wild or what? All right. So again, just recap. US needs money, right? The US borrows money. They borrow it from the member banks, which are private banks that are in bed with the federal banks. US borrows it from the private banks. Private banks are going to charge the US interest. But the Fed's sitting there and the federal banks are like, the Fed swoops in and they're like, hey, we don't want you to wait years to get repaid back, private banks. We're just going to buy those loans back from you. And so what happens is the Fed prints a whole bunch of money. They print money, and then the Fed will buy back the loans from the private banks. The private banks will get a piece. They get a little bit, they buy it back. The Fed will buy it back at a premium. So the private banks make some money, put it in their pocket, and then the Fed takes on the contract to where the US government now directly owes the money to the Fed. Right? This is what happens, guys. And if you look at like this interesting dynamic of why it would be confusing like that, like why would you have the middleman? Why would you have this? You got the US government, you got the Federal Reserve and the Federal Reserve banks, which are 12 of them, and you got private banks like JP Morgan and Citibank, who all own a piece of the Federal Reserve banks. So when the US government needs a loan, sometimes they will go get this loan from the private banks, and the private banks are now loaning the money to the US government. The Federal Reserve comes in and says, hey, private banks, we don't want you holding this money for so long. We'll buy the loans from you. The Fed prints money, buys the loan from the private banks, and then the US government now owes the money to the Fed. Interesting, right? Interesting. But who wins in this scenario? The private banks win. They just made a whole bunch of money on the spread. Okay, so I'll show you the math on how this works. This is fascinating. Sean's saying wild. Yeah, this is wild, okay? This is wild, right? That's how it works, right? So now the Fed holds the loan, right? So the US still owes money. They borrow $100. And we know this is happening in the billions and the hundreds of billions, right? But the US still owes the full loan repaid to the Fed. So they got to pay $100 to the Fed plus interest. So in this scenario, let's call it $105. But how does the Fed actually get paid back? So if the US is getting loan money and they're paying this money back to the Fed, who's in bed with the private banks, and the US has to pay this money back. But at the end of the day, the US is spending more than it makes, and the US is $34 trillion in debt. So if the US can't pay back the loans, then how do they get revenue so that they can pay back the Fed? They tax you. And so your tax dollars will go back to then pay off the loan of the money that was printed and given to the US government. Print, print, print. But the thing of it is there's two hits on it, okay? And this is important to know. There's two hits when the money gets printed. Now, who's printing the money? The Federal Reserve is printing the money. They're loaning that money to the US government. But before they loan the money to the US government, they go to the private banks, the middlemen first, okay? Before this whole deal goes between the Fed and the US government with a loan, there's a middleman in there, and that's the private banks, and the private banks get a piece. And because the private banks own a piece of the Federal Reserve, the private banks are in bed with the Federal Reserve banks, period. All right? That's how it rolls. So now you have a situation where the money printer is on, and the money printer is on because the US needs money, because the US spends more money than it has. It spends money on wars, spends money on bailouts, spends money on whatever. So they got to tax the citizens to pay off their debt. But the worst part about it, which is the invisible tax, is the fact is that when more money is printed into supply, then not only do you have the citizens who are taxed to pay off the debt that the US government has in loans that it's getting from the actual Fed, but then you have more money put into supply. So the dollar is worth less every time the Fed hits the money print button. And so the dollar is weaker in the hands of American citizens. And so what they have buys less. And so you have two taxes. You have the taxes that we pay to pay the government, who needs to pay its loans back to the Fed. And the Fed is owned by a bunch of private bankers. So one could say that private bankers control the United States. And one could say that the government isn't actually in charge. So that's how the system works. And then the more money that gets printed, the more your dollar gets deflated, because if you have like a slice of pizza, right, and all of a sudden there's 10 slices and you have one slice, and then all of a sudden the pizza pie, we print more pizza or print more money and the pie gets twice as big, but you still have one slice, your slice gets diluted. That's called inflation. That's the invisible tax. So this is what's happening in your economic system. All right. And we can get in to a whole nother conversation on what's going on in, Argentina and the inflation that's happening there, because this just doesn't end at the US. This isn't just a US problem. I mean, this is a currency problem all across the world. Now, the Fed obviously deals directly with the US, but if you look at other countries, they have very, 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 very big issues with their currency. Okay. So that's the system. And so in summary, like, one should understand this because it's how our system works. And to give you the just brass tacks on it one more time, okay? You've got the government needs to borrow money because they spend a lot. So they borrow money. But the money that will get loaned to the government will be from the member banks, which is the private banks who are in bed with the Federal Reserve banks. And so when the private banks loan the government money, then the government has to pay back that loan plus interest. But the Fed doesn't let the private banks sit there with the loan and the debt on their balance sheet. The Fed comes in and they buy the loan. So if the loan was $105 from the private banks to the US government, the Fed comes in and says, hey, we'll buy the loans from you private banks for $102. The banks that the Fed buys it from, they put some money in their pocket. The bank pockets a few bucks off every $100, every million, every billion. You can just magnify the money by that. And now the Fed has the contract of the debt that the US government now owns directly to the Fed. So the government still owes the Fed and they still owe them the interest. The bank just picked up their profit by being the middleman. And who pays all of it? Who pays for it? The taxpayers. You do. The banks profit immediately. The Fed collects interest long term. And you lose twice. You lose on taxes and you lose on inflation. And that's how the game is played. So if you're wondering why this economy is in such a predicament and such a tough problem, is because you have a money printing system that is just a loop that one can virtually never get out of unless they outpace the debt and the money printing. And so that's where Bitcoin comes in as a potential solution, because you sure as heck ain't going to do it by feeding the loop that is the insanity loop of government needs more money, Fed hits the money printer, government gets the money, government spends more money, government taxes people, there's more money in supply, inflation eats away at your wealth, and it's a never-ending loop that destroys economies and destroys countries, and that's why we're $34 trillion in debt. So that's how the game's played. And I'm sorry if it's confronting news. I know Warpoint was saying I'm making you nauseous, but that's how the game's played. So you can go research it yourself. If you want to go get some of the data, there's some source data on this where you can go check it out. You can go to just check some of the facts. You can go to the Federal Reserve History, go to federalreservehistory.org, and you can learn about the Jekyll Island meeting that took place when the Fed was first created. You can look at Woodrow Wilson's quote on Congressional Record in 1916 of what he said about it. You can go look at the dividends and reserve bank stock at federalreserve.gov to go check that out. And you can go look at the historical debt outstanding for the U.S. Treasury at fiscaldata.treasury.org. So all this stuff, this public knowledge, you can go look it up and check it out. But I would say that we have a confusing money system. And I would also say that when you can't find the source of what's really happening, it can leave an entire population in confusion. And so the purpose of sharing this with you today is to share with you the source of how the game is played. And as you know, we were taken off the gold standard in 1971 by Nixon. So every dollar that used to be backed by gold is no longer backed by gold. And that's when you really started to see the economy of the United States really crumble and go into these just high debt times. And if you look at the history of the debt and you track down the history over the years, you can see that the U.S. debt was, I have some notes here on it real quick. In 1980, the debt spiral was 900 billion. In the year 2000, it was 5.6 trillion. And in 2025, it's $34 trillion. So if you look at this spiral of debt since 1971, and we came off the gold standard, it's been a problem. And now we live in a world where money is only as good as the decree or the statement of the government that backs it. And that's it. So if you looked at the old times, like when money used to be backed by gold, you didn't just need to trust in your government per se, because you knew that, like, okay, we've got some hard assets like gold backing up the dollar. And so if anything ever happened, you could melt down the gold, you could use the gold, you had a hard thing there. Well, once we got taken off the gold standard in 1971, fiat basically means decree. And decree means statement. I don't know if you knew that, but fiat, the derivation of the word fiat currency, fiat means decree, statement. It's only as good as the government says it is. So now your confidence and your trust and your money is in the hands of the government that serves you. And it's only as good as your trust in the government and how well that government's going to do. And take that across the world, governments across the world. So now you introduce Bitcoin and you see why more and more people are gravitating towards Bitcoin, because Bitcoin is the logical choice. In fact, if you just see how I broke down how our money system works, Bitcoin is the sane choice. Sane. Because the way that the money printer works and the way that the Fed works with the US government, to me, is not sane and it's not logical. It's not. And it's not sustainable. And if you look at the number of civilizations that have come before us and have failed and money systems have collapsed, one day this will happen. One day this will happen. So we have to get prepared. And I'm not being doom or gloom, but one has to look at it and go, okay, great. So why is Bitcoin the smart choice now? Because Bitcoin is a sane. It actually makes sense. It actually makes sense. And it would be interesting to take a look at this viewpoint to go, people who are in the traditional system, is it possible that because at the top, our money system is so confusing that as it goes all the way down to the bottom, could it be possible that an entire financial industry that has sprung up over the last 100 to 150 years is incredibly confused? Because if the source of your money is confused and you don't know how it operates and how it gets printed, and that the banks, the private banks, are in bed with the Federal Reserve banks, and then they feed the government, who's in charge? And if one doesn't understand the source of where it comes from, how could one understand the traditional financial system fully and have any confidence in the traditional financial system? And so you have a confusion on what's happening in the financial world. It's a confusion. And so people will grab on to stable things in face of a confusion and will say, well, I think the tradition, I'll grab on to that 10% that I'm going to get for the next 20 years. I'll grab onto that. And they'll grab onto stable things because it seems stable. It seems like it works. It seems like it's smart, but it doesn't work. It doesn't work when you have a government at work and a Fed at work printing 6.5% more money every single year. It's not sustainable. It doesn't work. It's not sustainable for you. It's not sustainable for the US government. And it is sustainable for the Fed because the Fed and the Fed banks will make money off of it, but it's not sustainable for the population. Savior, Bitcoin. Because we do have to earn and produce at a rate that's much, much higher right now to outpace the debt. So if the US ever wants to get out of the debt, their only hope on this is Bitcoin. What else are you guys going to do? Keep hitting the money printer? They're going to pay back $34 trillion in debt. It's not going to happen. It's not going to happen. They'll just keep pumping the system, keep printing the money. And at the end of the day, who suffers for it? You do, and I do. Because our currency gets devalued, our purchasing power is less. What we could buy 10 years ago is less than we can buy now. And the inflation eats the hell out of us. And the only way to feed the system is to tax you more so that the U.S. government can pay back their debt to the Fed. There's the game. Okay? So the new game is Bitcoin. And people need to understand that this is truly a sound money. And you've heard it said a million times, but now it's interesting to revisit it, because if you're stacking up the dollar, you're stacking up the traditional financial system, and you're stacking it next to Bitcoin, and you look at the sanity of money, you will find that there is a sane money with Bitcoin, and on the other side, there is an insane money system. Period. So I hope this serves you. I don't mean to leave you in doom and gloom, but the hope and the benefit and the joy of this is the fact that Bitcoin is not in a situation where we continue to hit the printer of Bitcoin. There's no printer. There's no central authority that decides print. There is just a technology. It has rules. Thank God, because it has sane rules. Yes, makes sense. And those rules are followed because they are set in the code. And we know there will only ever be 21 million, and there's 19.6 million or something in circulation right now. And so as time goes on, Bitcoin will become more and more scarce. Bitcoin is totally finite. And to me, it is the sound choice on the planet. And I don't see too many other sound choices in the traditional financial markets. Now, of course, you have the merging of the stock market, where Wall Street will always come in and find ways to make money. So you have companies like Strategy that are doing intelligent things and putting Bitcoin on their balance sheet. You have companies like BMNR that are coming in and putting Ethereum on their balance sheet. And so I look at those companies and I go, great, is the underlying asset of what they own, is it sound? Does it make sense? And then the reason I picked Strategy in 2024 February and was at $79 and I bought it is because it made sense. It made sense. And I had understood Bitcoin since 2018. I've been buying Bitcoin. And the reason now is I'm looking at BMNR and why I bought BMNR, not suggesting that anybody do this. I bought BMNR for the very standpoint of like, okay, if you look out and zoom out at the global picture, if you look at the current financial scene, you look at the current money system, you look at the current debt, you look at the trillions and trillions of dollars of debt, and you look at the hitting of the money printer constantly, and you look at the influence and control of the Fed gets on TV and says one thing and it changes the dynamic of everything. You have to be looking to a system that, like, where is the sanity in the system? And you look at Bitcoin, and you stack it up, and it goes, this is a sane piece of money. You can call it a store of value, call it digital gold, whatever you want. It is a sane piece of money. Okay? It's just sane. So you look at it and go, this is getting, and it ain't going anywhere. It's just not going anywhere. And then you look at Ethereum, and you look at why is Ethereum smart and why is it sane? And you can sit here and dispute if Solana's faster and all these different things. But Ethereum's been around. It's kind of it's like you have Bitcoin as the grandfather. You got Ethereum kind of as the father. Where's Wall Street going to go? They're going to Ethereum. They may go on Solana too, but they're going to Ethereum. The stablecoin market is on Ethereum. More than 50% of the stablecoin market is on Ethereum. So when you look at the principles of, are we going into a future where stocks and bonds and notes and real estate will be traded 24/7, 365, and give other people an option to invest in these things? How do you do it? You tokenize these assets and you put them on Ethereum. And people will say that, it's expensive and the fees on Ethereum are expensive and blah, 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 blah. No, you have companies, you can build financial apps on top of Ethereum. So you have many companies that are building financial apps on top of Ethereum. So as Wall Street's moving over, because they are, and if you missed the earlier part of the show, the largest bank in Singapore just tokenized their notes. They tokenize notes and they're putting them on Ethereum. So the world can have access to their notes. So the banks, the financial institutions, where are they going to go? They cannot compete with the speed of the technology of the blockchain. It's more secure and it's faster and it's open 24/7, 365. There is no way on God's green earth that the financial institutions are not moving there. They're already there. So that's what's happening. And so when you look at Bitcoin, sound, finite, scarce, like operates on rules, decentralized, is not operated by insanity. Smart choice. And you look at Ethereum, programmable money, man. You get on there, you program the rules, you program any contract you want. Right? The number of people that will start doing business on these platforms is going to be mind-boggling into the future. Mind-boggling. Okay? So this is, the future is here. There will be other chains. I know Solana is a hot chain, but in terms of where the government is, they are in bed with the stable coin market. Every digital dollar that's out there in the marketplace, digital stable coin, I should say, every stable coin, which is a digital dollar that's out there in the marketplace, must be backed in the US by a US dollar or a treasury bill. And there is a fortune to be made on that, an absolute fortune. All right. You think the banks are excited? Absolutely. Because the more stable coins that get issued, they got to be backed by a US dollar. And also, they don't just have to be backed by a US dollar, they can be backed by a US treasury bill. So instead of issuing the stable coin and just backing it with a dollar where it's dollar for dollar, you can back it with a US treasury bill that earns 3 or 4% and make a fortune. Fortune. So the more stable coins that go out in the marketplace, the more the US government with the T-bills gets rich, and the more that the banks are in the game, and the regulation that's in place right now makes it so that the platforms are now regulated, and there's laws in place and there's rules. And now that they know there's policy, now that they know the US government's backing it, the financial institutions are coming in, and they're coming in hard. So it's going to be one hell of a run over the next 4 months. So strap in, get ready. It's going to be fun. And if you missed it earlier on, the news on strategy on September 5th, we will know if they are added to the S&P 500 on September 5th. The vote takes place then. And as soon as September 19th would be when the passive flows come in, billions and billions of dollars start flowing into strategy from the S&P 500. So yes, Uncle Tommy, who sits at the Thanksgiving dinner and mocks Bitcoin and mocks strategy, but owns the S&P 500 index, and he doesn't even know what strategy is. When strategy gets onto the S&P 500 and passive inflows keep coming in to buy strategy on autopilot, he will be sitting there at Thanksgiving unknowingly buying strategy that he's probably never heard of. Okay? So that's the story of what's happening in the marketplace. And then if you missed earlier, I think it is exciting news to know that the European Union is looking at potentially putting their digital euro on the blockchain, and they're looking at Ethereum and they're looking at Solana. So what are the implications for that if that goes on to the blockchain? That is huge. All right, so fascinating things happening in the game. It's great. It's not guaranteed, Sean, that strategy gets in at all. The great hope that I have on it, it's either going to happen, I think, in September. On September 5th, they get voted in, or December, they will vote again. I don't see that I can't see that it would not happen in December. I think it's going to happen in September. I think it's going to happen. So we will see. I could be right, could be wrong. And then who knows how the market's going to respond, right? There might be, I don't know. I just know I'm holding on to strategy, and I will take profits at the end of the year on strategy. And I'm holding on to my Bitcoin, and I don't have any plans to sell that. And so we will see what happens. And I'm holding on to my BMNR because I think it's exciting to see what's going on. It's the next MSTR. Like, if you love MSTR, go study BMNR. I'm not saying invest in it, but just go check it out. We don't have to be, I'm not like I definitely am a diehard like fan, love strategy, hugely invest in strategy, diehard Bitcoin, but I'm not close to the fact that when something new and exciting comes out from Saylor, who wrote the playbook and handed it to these people, and somebody's deciding to do it with Ethereum and model what strategy did with Bitcoin, you just got to admire it and go, listen, I want to find out what's going on, man. Okay? I want to find out what's going on. And so it's exciting. The price I'm in at BMNR is at 60. All right. I didn't want to wait. So I bought in, my cost basis is 60, but I bought in at 38. I bought in at 68. I bought in at 60. I bought in at 57. Because I'm like, we had that run 2 weeks ago and I was so excited. And hindsight is like, could have waited for the crash and could have waited. Who knows when the crash is going to come? We didn't know it was going to happen in August. We knew August might be slow, but Ethereum was booming. So I just went and I bought. But I had one of those moments just like I had with MSTR when it was at 79 bucks. And I am not saying go buy this. If you're new to the game, if you're new to Bitcoin, like the last thing I would do is I was brand new to this game is go ape in and go buy something I know nothing about. Okay. But for me, just my personal choice, I'm just sharing my personal choice. My choices and my investment strategies are definitely not yours. You have to make your own decisions and know where you're at. But I was just excited. And the more I watched Tom Lee and the more I saw what they're doing and the more I saw that they're basically copying Strategy's playbook, I'm like, I got to know about this company. So I just started gobbling it up and consuming it. And Remy, I agree. Tom Lee is a financial genius. So I just started consuming it. I just started consuming the data, learning more about Tom Lee, learning more about the company, seeing the investors who are behind the company. I'm like, I got to get in this game, man. And so I went in some and then more and then more and then more and more. And I'm invested. I'm not like just like tinkering. I'm invested in BMNR. Okay. So my holdings right now are MSTR, Bitcoin, and BMNR. Those are my holdings. All right. So it's exciting. So if you don't know anything about it, I did a video last week. Go check out the videos in the playlist here on BMNR. There's a whole video that describes what BMNR is. Of course, I report on strategy on this channel. I talked about it earlier on. And I'm going to report on other things too. We just talked all about the Fed and the source of where our money printing comes from and the source of how the government operates with the Fed and how the private banks are in bed with the actual Fed and how all of that works. It's, you know, whether it's a good thing, a bad thing, you can decide. I'm not here to ruin the name of the Fed or ruin the name of the U.S. government, or I'm just here to point out the facts. Here's what's going on. Take a look, decide for yourself, okay? And, you know, ultimately, at the end of the day, I think people are doing the best job that they can. Whether you agree with the job they're doing or not, you just take a look and you decide for yourself. All right. The videos are in. I do all my stuff live, guys, because I just like to do it live. So if you go to my playlist and go to the live section, you'll see it says the next MSTR, and then it says BMNR, and there's 2 videos on it. So you can watch the first one that breaks it down, and then you can watch the second one. And I will be reporting more on it in this channel because it's just it's too exciting not to. It's just too exciting. Like strategy is so exciting and Bitcoin's so freaking exciting. And now what's happening with BMNR buying Ethereum is just like, it's exciting, man. Like it's exciting. So I'm excited. I hope you guys are excited. MSTR versus BMNR. D-Money says if you had to choose one, which one? I choose both. That's it. And also with, you know, at the end of the day, I remember I bought into strategy way back when it was way, way less, guys. Okay. Now I did buy some stuff in strategy later on when it was in the 300s, but the massive bulk of my position is at $79, $100, $122, $149, $190. Okay. So I have like a cost basis in the 100 and something range on strategy. So I'm already up whatever that is. Like I'm up like a 2.5x on strategy so far. And so I'm in the money on it and I'm not selling it right now. And I'm not selling my strategy to go buy BMNR, but I have some things that I trade on a daily basis because I trade. And so I have things that I trade that are highly leveraged. And so the things that I was trading, I swapped out of them to now be in BMNR, and I'm holding BMNR, but I trade it on a daily basis too. And last week, I must say I made 18% trading BMNR. Pretty good, right? So it's fun. I traded with a small percentage of money and I enjoy it. And last week, I made good money trading BMNR. And so that is a part of the game that I play as well. All right. So I'm coming out with a new book. It's called Money Game. When it's out, I'll let you know and you can check it out. But it literally goes into the history of the money. It goes into the history of the Fed. It goes into Bitcoin and what it is. It breaks down the halving cycles with Bitcoin. It introduces what MSTR is. It tells you how MSTR is structured, and it gets into all the things that are thrown around about all its different financial products. It gets into the MNAV premium. It gets into all of that. And also I go into Ethereum, I go into BMNR, I go into treasury companies, and I explain the whole gamut all the way down. And then I talk about just basic, simple investing with the rule of 72. And then I reveal my trading strategy of how I trade on a daily basis to make income every single day or week or month, rather than just holding on to assets. I hold them and I trade them too. Okay. All right. So I hope you guys have a great, great day. I love both MSTR and BMNR. I'm newly invested in it. So my loyalty and my passion and my holdings of my majority of my money is in MSTR and Bitcoin. And I'm playing with BMNR and I'm invested in it. I'm holding it. Okay. I will take profits at the end of the year, just being fully transparent. And I will not hold BMNR. What I have now, I will not hold the majority of that long term. And with MSTR, I will sell off and take profits. I don't know how much I will hold on to, but I will definitely, right now, this is my viewpoint, be taking profits at the end of the year. Of course, we have to see how the bull run plays out. We have to see what happens, but I think we're going to see some exciting stuff second half of September, October, and November. All right. I hope this serves you. And again, go to my playlist. You can, if you want to learn about BMNR, it's there. If you want to learn about how the Fed operates, it's all in this video. So if you missed the first half of it, it explains the U.S. government, the Fed, and the Federal Reserve banks, and also the private banks that are involved, and explains how the money system works. All right. Hope to see you soon, and have a great day. And remember, not financial advice, not tax advice, not legal advice. All these things are highly volatile. All right. So be smart and get educated and understand and learn about it, right, before running in and doing something blindly because you hear about it. Right. That would just be my personal point of view. If I were giving myself advice, I would say learn about it, not invest in it, just learn about it. And that's why I'm here, to just say, let's learn about it. Okay. All right. Have a great day. Have a great night wherever you are. You guys are amazing. And I will talk to you soon. All right. Stay well.